Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be taking a look at the disconnect we're now seeing between the price of Bitcoin, which is now down around 10%, and the price of many of the Bitcoin mining stocks that we cover on the channel. Now, obviously, a big kickoff point for this was the CoreWeave deal with Core Scientific. That really galvanized the industry and brought a lot of eyeballs in terms of the HPC infrastructure and access to power that these miners have. That moved the larger miners in a big way over the last few weeks. And what we're starting to see now is a lot of the smaller miners that we cover on the channel really starting to catch up in a big way. Now, before we get into all this, please take a second, smash the like button, you guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below which of these miners you're currently holding, your outlook on some of the smaller names that we cover on the channel, and your price prediction for Bitcoin in the back half of 2024. Now, with that being said, let's get into today's video. Okay, guys, so that's right. Today's video, we're back in action, a traditional podcast. Anthony and I have been on the road for over a week now. As you guys know, we were able to get a live podcast in with a special guest, DR Lewis, yesterday and talk about a lot of the price action we've seen over the last few weeks. Now, as you can see in the thumbnail, we've actually done the inverse of the video we did a few months back, Anthony, where the price of Bitcoin now has pulled back from about 10% really from the highs we were seeing. However, a lot of the mining companies have really had a strong run in the last few weeks. Now, that was initially led by the HPC news as a result of the CoreWeave deal. But what we're seeing now, Anthony, is a little bit different with some of these smaller, lesser known companies really starting to take main stage. And that's what we wanted to explore in today's video. So, Anthony, how do you feel being back on the regular podcast here?
Yeah, good to get back. Like I say, we've had a nice week away, visiting a couple of sites, but now back to reality. I enjoyed yesterday's live podcast with DR. That was good, and it looks like pretty much on the same page as where we are in terms of his thoughts on the majority of the stocks that we covered. I didn't see any sort of like really disparaging views. So and it's great that he's been following the stuff we've been doing for a while now. So that was positive as well. But yeah, it's a good podcast here today. Great to be back on our normal podcast now. Not a massive amount of minor news at the moment. We think there's things bubbling under the surface, though, that could come out in the next few days. So we'll keep an eye on what's happening there, and we're very impromptu. We can get some podcasts out fairly quickly in reaction to any news items. So, but today, yeah, we'll talk about some of those maybe some of those smaller miners and how they're performing now going forward.
Most definitely. And we're actually going to try and have a guest speaker on about once a month on the live podcast. We're working on Bitcoin mining stock guy right now, Anthony, to do his big reveal or let us know who he actually is on one of them, but we're not making a lot of progress there. Now, as you said, Anthony, we've been covering some of the big name stories here, the IRENs, the Core Scientific, the Bitfarms Riot saga that's going on. Obviously, a lot of these big tier one miners, as we would call them, have seen a lot of interest from the institutional investors, as was evident on the bus ride and questions at the tours we were at. So we've seen a big share price move in a lot of these kind of key well-known companies. But now what we're seeing, Anthony, and if you look at the charts today, we've got Soluna up in excess of 30%. That was one we were talking about a bunch yesterday on the podcast. Very differentiated business model. I'll let you get into that one. HUD 8 has been very quiet. We still haven't seen May production results. Haven't heard a lot from the team. They're up 10% on no news today. We've got Hive up 7%, which is another one, Anthony, that you were talking about in terms of a value play. And really a lot of the smaller miners making great moves today. Bitdeer up 9%, Cypher up 10%. So we wanted to explore this a little bit. It's so nice to finally see this decoupling of Bitcoin spot price and the price of the miners, but now actually working in our favor. So I wanted to get your thoughts there, Anthony. Maybe let's start off with the big tier one companies, address the HPC situation in a couple words, and then we can move into the smaller.
Yeah, I mean we've seen some really significant gains in the last few weeks, pretty much ever since the announcement from Core Scientific with their deal with CoreWeave. I mean, that was pretty much one of the biggest news items we've had in the last 12 months. And we've had some big news items, but really there's been a lot of skepticism about the mining companies going into this business area. And we've seen quite a few pivot that way. And, some have come out with some, steady numbers in terms of revenues that they're earning at the moment. And we had the Bit Digital story where, they announced a client, with a 50 million a year revenue that's now been increased to 100 million. So as they progress their current facility to cope with that expansion, by the end of the year, there'll be 100 million annualized revenues there. And we're really thinking that was like the benchmark. And all of a sudden now we've got Core Scientific announcing a $3.5 billion deal over the next 12 years, and a really different model from what the other miners are looking at. So Core Scientific are providing the facilities close to the power. The power cost itself is a pass-through cost. The risk of the power is a pass-through cost to the client. So they're providing facilities, and guess what? In this deal, CoreWeave are paying 300 million in advance for Core Scientific to build the facilities to the right specifications, and then Core Scientific will pay that money back just over the first 2 years. So in the first 2 years, they're still making significant free cash flow, but that becomes in year 3 about $233 million a year. $233 million a year for the next 10 years. And we were fortunate to go to their flagship facility at Denton last week, be involved in the Investor Day with a lot of these Wall Street analysts who were all there about HPC. Nothing was, they weren't interested in Bitcoin mining at all. So it was all about HPC. And then Adam, talks about the process of how CoreWeave was selected, and the fact there were 50 companies showing interest in that particular business plan. And obviously quite a few of those were whittled down because the Core Scientific were clever and put in a threshold that you had to reach. You had to have a minimum of 100 megawatts and provide the capital up front. So that discounted quite a few of the initial interest from some of these companies. But what it did say, there was still quite a significant amount meeting that threshold. So when they announced they've got another 300 megawatts of available power, that really gets the audience active then, because it's all about predictive revenue streams, and Core Scientific now have got more of a predictive model. And Sam talked about this months ago when he had the contract. Yeah. They're a Bitcoin miner, but now they've got a HPC revenue stream that is predictive for the next 3 years. They know literally what they're going to get paid every month, and they know the costs associated with that. With Bitcoin Anthony, mining.
What was funny about that is we were looking at my phone as they were talking, and we could see the share price ticking up literally as Adam was saying the words, hey?
Well, it was literally halfway through the presentation, and you can go back to that day. There was like a 10% spike in the share price. So I'm not indicating that Adam's, but when when you're looking at that sort of free cash flow for 200 megawatts, you can start understanding what 300 megawatts additional would look like. So, you could be heading towards 600 million of free cash flow just for the HPC business alone. That would be more in free cash flow than probably any of the miners are going to achieve for a number of years. It's just like, and what it does is it gives the likes of Adam and his team there the ability with his free cash flow to determine how to grow the Bitcoin mining business or look for more sites for HPC, which model works. They're going to continue Bitcoin mining. They're not dropping that at all. And actually, some of the questions were about, you've got over 1 gigawatt of power available. Should you look to transition across to HPC? No, they're Bitcoin miners. And, they've now got 2 businesses, which they're both, they're happy with. And, we've seen a number of miners come out and say they're not going to go HPC, the pure play miners, and Jason was very articulate about that. And he was asked a couple of questions, but he firmly stamped that down straight away at the start of his presentation, saying, we're not interested. We've got a load of power, but it's all for Bitcoin mining. And Jason's strategy is they expect the Bitcoin price to rally significantly higher, and there is a threshold, and Sam's talked about the threshold at which Bitcoin becomes, a valid business. And I think from his model, it's about 110,000. So it's got a long way to go to get to that position where his Bitcoin mining business starts outperforming the HPC business. Yeah. And, that might be the same for other miners as well. So, if we're to believe half these analysts out there who think the Bitcoin price is going to say 200,000 or 300,000 next 2 or 3 years, then if you're thinking that far ahead, what do you go after now? Do you go after preparing for Bitcoin, or do you sort of look? And I can see both sides of this. I'm not going to say one's better than the other, but that predictability from Wall Street certainly gives a tick to those companies involved in HPC. It was all about HPC. I think out of the 50 questions, 47 or 48 are about HPC, and me and you managed to throw in a Bitcoin mining question. But
So yeah, I think you've set the stage perfectly here, because the HPC was the catalyst, right? And then from there, we started to see, you could almost see the gears in these analysts' heads turning, and you said, oh, well, if Core can get this kind of deal, well, then IREN can get this kind of deal, or CleanSpark can get this kind of deal. And we started to see those tier one share prices really move. Now, you're probably smiling, Anthony, because you're looking down at your phone right now, but all of the companies, just about other than IREN, actually have turned green. So this morning, everything was up big pre-market. Market opened up, great green open. Then literally on the turn of a dime, Bitcoin took a dive, all the miners took a dive, and now they've recovered. So we talk about volatility on the channel. This is volatility in real life, you guys. So Anthony, we had that portion of the situation. Now what we're seeing is investors, analysts, institutions are starting to look in the fringes here a little bit. So maybe outside of their regular scope, the regular market cap sizes or traditional metrics they use as requirements to look at these companies. And we're starting to get a lot of attention actually in a lot of the smaller miners that we cover on the channel. So think Gryphon, think Soluna, SATO Technologies, DMG, all of which are green today and moving in the right direction. So Anthony, do you think this is a byproduct of the HPC discussion? Do you think these are just unknown stocks that are now being discovered? Or why are we starting to see such an interest in these small or micro cap Bitcoin mining related companies?
We've seen the movement in the big companies over the last few weeks, and that gap between those that have been able to sort of grow significantly and are growing till the end of this year to get those big hash rates. And then we've seen some of the smaller companies who've not got massive growth targets this year in comparison to the big companies. These growth targets from these small miners got this year are as big as what they were in the last few years for any of the companies. It just seems to be 2024. Everyone's going after that is going after the growing hash rate. And, we've got 5 companies that are going to grow between 10, 20 and 30 hash rate in a single year. Go back 3 years ago and the biggest company was around about 5 exahash. And we're talking magic numbers now as we go forward. So the emphasis has been on those. Now the spotlight seems to be highlighting a number of these smaller companies. And we had a chat yesterday about the cost of value of hash rate and the floor price. If we look at the Riot Bitfarms deal there and what the floor price for hash rate would be of about 100 million. Well, we didn't discuss the smaller players there yesterday who've got, maybe between sort of half an exahash up to say, 3, 4 or 5 exahash. We used to sort of say 3 tiers. I think we can sort of maybe look at maybe 2 tiers now, because I think it's those that can and those that will find it more challenging. I'm not saying they're not going to be able to do much, but they're going to find it more challenging to grow. And I think the spotlight's looking at some of these smaller ones and saying that, what have we got here? There's, for some of these to grow, there's going to be some M&A activity. Maybe 2 or 3 can look to go together and then become a little bit bigger to do things from a bigger position. It's so hard. If you're at sort of like, I don't know, 1 exahash or lower than 1 exahash, how do you grow to 2? How do you double in a year where you can't borrow money from the market? You don't have a significant Bitcoin hodl to sort of grow. And if you start diluting your share price, which, because you're at that level of hash rate is probably quite small, probably lower than 50 million. So if you're going to, dilute 10% of the share, the shares and get 5 million raised, how much is that going to cost the company? And what will 5 million do in today's, earnings? You look at Corsicana. We just went to Corsicana last week. $670 million they spent at Corsicana to get through to phase 1, I think, and also 200 megawatts of phase 2. So, they're the sort of numbers that some of these companies are having to spend and grow. Now, Riot raised, I can tell you now, Riot raised $500 million in the first 4 months of this year, to help pay for that construction and some of the miners that are going to that facility. That's the sort of numbers. So if you're at sort of a market value at 50, how do you do that? And that's where the problem is. Now, if some of these can, maybe merge together and grow, and some of the synergies, they can make a certain amount of savings. They won't make massive savings in terms of staffing because a lot of these companies are quite lean. I mean, you can go through, we look at Bit Digital, I think, is it 15 employees? Even Marathon's not much more than 50, maybe 60 employees now, something like that. Riot had 500.
3, didn't they?
Sorry?
Gryphon's
got 3. Gryphon's
yeah.
got 3, and I'm not even sure who's making the tea there. So I don't know what's happening there with that. So probably Rob. He's probably Rob's turn to make the tea again. So, it works okay. So if they're going to amalgamate, it's not like we can cut loads of posts down. I don't think Rob's paying. They won't be paying themselves pop star wages there because they're growing a company. You'd like to hope they're not paying themselves pop star wages because they want to use as much of the resources to grow the company and give them opportunity. If they get to that position where the shareholders get value, they can get a bit of value at the same time. So I think we'll see. We'll probably see a lot of merger and acquisitions if the Bitcoin price holds where it is at the moment, because we are seeing that hash price in terms of revenues coming down. We talked about it yesterday, round about the $50 per petahash now. So, it's less than half of what it was before the halving. So it's not like they're making any extra. Transaction fees will play a part in the future, but we've not seen any sustained transaction fees. We've seen it for like 2, 3, 4 days. So we'll need to sort of keep an eye on transaction fees. Some of the people in the space who think, once Bitcoin mining gets unviable, transaction fees will start kicking in because the way the system works is you've got to have miners. You've got to have miners on the system. You can't not. So there'll be an element that they'll start raising transaction fees to cover that cost of mining. So that's yet to be seen. It's not really happened before, but I sort of understand that that would have to be a way forward because the reason the miners are on the network, and apart from just mining Bitcoin, is they're making the network, making the transactions, all secure and it's constantly audited. It's not like an audit company going into a company and doing it once a year. They're audited. It's constantly audited every day. So every transaction is validated so regularly that even when you hear these stories about my Bitcoin was taken away, they can find a transaction. They can follow it. It's not like, and maybe, a few weeks later, we get a story comes out, yeah, it was found, we got it back, it's okay. Losing your keys is a different thing. There's been some horror stories on that there where computers have been put into waste dump sites.
Oh, yeah. That was in England too, wasn't it?
In England, a guy had, and he might have only paid, hundreds of pounds for this Bitcoin, but it was worth something like £200 million, and he offered the council, who had the site, 50 million if they would actually pinpoint where the actual waste was put for that particular exam, because they'll probably have a record of every sort of time waste has been dumped. So he was prepared to pay sort of 25% of his whole stack to give to them, and they went, no, not interested. So.
Now, Anthony, you bring you bring up a couple good points. I saw a table, I'll throw it up on the screen. I think around 17% of Bitcoin total in the world right now is considered lost, either physically lost on a hard drive or like you say, you forgot the keys there, Anthony. So if you're gonna cold storage, you guys self-custody, write down the key phrase on metal. I've heard a lot of people stamp it into metal is actually a good way to go. But the other thing you brought up, Anthony, was yes, I think there was a general feeling, us included, that these small microcap miners were kind of painting themselves into a corner. There wasn't a lot of available levers or leverage for the company to grow. But now with this HPC focus, I think Wall Street has realized, hey, regardless of if this company grows or not on the Bitcoin side, they've got access to infrastructure and power that we want. And that's valuable regardless of the size of the company. And that's why we're starting to see an uptick here. So Soluna is one we talked about yesterday, Anthony. Specifically, their differentiated business model. For those of you who aren't familiar, they don't necessarily go out and raise money under the parent company. They use project level financing. So they'll go out, they'll come up with a plan or basically a business model like we saw with Dorothy. And then they'll go out and find investors for that specific project and those specific returns. Now they've completed Dorothy 1, they're saying, hey, let's emulate this in Dorothy 2 and essentially use this cookie cutter template that we've created for additional business opportunities. Now, you and I, Anthony, we've talked to John quite some time, for quite some years, and we definitely understood this business model and saw the value there. But based on the share price this morning, it appears other people are now starting to follow that trend. So I wanted to get your thoughts specifically on Soluna.
Yeah, I say we've been following for quite a while. We've had John on the podcast at least probably 3 times this year already. And yes, they are one of the small miners. We sometimes get criticised for, why aren't we just covering all the big miners? But you know what? 3 years ago, all these big miners were small miners then. So, maybe Soluna, as it is at the moment, could be the next big miner in 3 years' time. Who knows? But what I like about what they do is, they put together these projects. So they go and source the stranded energy that it's got no other use to the utility company. They can't. There's no requirement for it, so they can go in there and get that at a really good price. And bear in mind, we mentioned yesterday, of all the mining companies, you look at the likes of what Cypher can achieve. They're under 3 cents a kilowatt hour. Well, Soluna are in that position as well. So, as well as a self-mining business, which is just under 1 exahash, just about 0.8 of an exahash, and they've got a hosting business. Now, with a hosting business, if you're getting your power at under 3 cents a kilowatt hour, you've got a good power rate to pass on. I mean, we know that Marathon, when they're hosting, they were paying something like 6.6, Bit Digital 6.6, 6.7 cents. So if you've got a power cost of, say, under 3, it means you can probably apply a nice little margin to that and still be very competitive for some of these mining companies to go in and utilize that service. So you can get the benefit of the margin on top of the power price that you're paying. And the customers at the same time, they're benefiting because they're still getting a great deal on power anyway. And they're probably getting a cheaper deal than if they went out to source for another provider. So I like what Soluna do. They come up with these projects, and we say they're small. I mean, the Project Dorothy one that's just been funded, that was $30 million of funding for that project there. So that funding will now be to grow that project and to get the revenues coming in. And the revenues coming in for that will be anticipated start coming in in the last quarter of this year, so Q4 of this financial year. And then really in next year ramp up. And I'll just give you an indication. So, the last quarter this year, just under 500,000 in terms of if the hash price is where it is at the moment, it'll be about 500,000. If the hash price is significantly higher, that might have an impact as well. So, but that the revenues for next year are going to be, upwards of $22-23 million, and then close to $30 million in 2026. So that's Project Dorothy 2. They've also got Project Catty, which is another project that they're going out now sourcing funds for. So they've got 166 megawatts of power. and they're going to now source a partner to come in with the capital to get that project underway. And I quite like that. This is in a sort of like in a similar way, but a smaller way to what Core Scientific are doing on their HPC. They're not doing anything until they get the funding up front. So CoreWeave are going to give them 300 million at the start of it, and then take that back over the first couple of years. Just over the first two years, they'll recover that back, and then really after that, then it's bingo time. It's profit, every month. And Soluna look like they've got a similar type model for their projects. Yes, we're on a smaller scale, but let's be real. The company's only valued, even at today's market capitalization, it's something like low 20, 24 million or something like that in terms of market valuation. And revenues next year are going to be close to 60 and close to 70 the year after. And that doesn't include Project Catty. So, they haven't included that in their illustration, but they've now sourced the power. And with the power, I mean, we know what companies looking at now. We're looking at power. It doesn't matter about Bitcoin mining. It can be used for anything.
And Anthony, what I was just going to throw in there, kind of twofold. The reason they're able to get such cheap power, you guys, is because they're behind the grid at sustainable energy facilities. So think of a wind farm. They're not able to store energy effectively at a lot of these renewable sites. So they send out whatever the grid needs, and whatever's stuck there is essentially wasted energy. So not only does it give Soluna a benefit on the price, Anthony, but they also have a lot of optionality in terms of location. They're not necessarily going out there looking for a gigawatt switch or 100 meg connection to a transformer or a power line. They can actually work with these sustainable operators. Think of how many wind farms there are in North America alone, or hydroelectricity, or all the rest of these sustainable operations that currently are just pumping this power back into the ground.
And also with Soluna, we've talked about the mining operation, self-mining, the hosted mining, two great businesses there, two profitable businesses there. They also have decided to move into HPC and have allocated a number of megawatts to that there. And in their illustration again, you're looking at significant amounts of revenues for this year, for next year, and 2026. So I think the market's starting to wake up now. I mean, I think maybe the CoreWeave deal has opened up eyes. As I say, we sat with many analysts and had 2 days where we had opportunities to speak to a lot of those analysts and find out, grow our knowledge base, because we're on here as sort of like doing this, and it's interesting to get the picture from those people that pay significant sums to do this in real life. And actually, to be honest or not, a lot of the information we were concurring with. It's not like they're seeing something totally different. The one thing that did stand out, and yes, we've been highlighting the HPC, was that deal was game changer. That was the word that was used, game changing, that deal. And maybe that's woke up the market now, because we've been saying for a long time most of these miners are moving into HPC as another viable business option. And yeah, we'll see that. But as I say, keep your eye on Soluna. Have a look at the presentation. It's got a lot of information on there, and make your own decision up before you decide to go and buy any shares. But if we look at that floor price of 100 million per exahash, and they've got 0.8 as one small part of the business, and the valuation of the company is at $24 million, I'll let you do the rest of the maths, because it's beyond me.
It certainly is. Now, I know we've talked about Soluna extensively, but this is just one of the smaller miners that we cover. We've also got SATO Technologies. We've got DMG Blockchain operating here in Canada. And we've got Gryphon Mining, headed by Rob Chang, with a lot of experience at some of the bigger mining companies. So this is another list, Anthony. You say that a lot of the large miners 3 years ago were really in the same position. You want to try and identify these companies early, you guys, before the institutional money comes in. So definitely worth taking a look at. I'll hand it back to you, Anthony, if you have any thoughts on those three as well. I know they've been fairly quiet with news, but definitely working in the right direction. Again, they've all got growth on the roadmap this year, and they've got the infrastructure and access to power that is now so valuable in this space.
Yeah, I mean, it's going to be it's going to be really interesting going forward. We want to hear that news from Core Scientific on the 300 megawatts. I think when that news comes through, then it'll be open season then, because what we're seeing now is power and facilities are the real bottleneck. We had the update from CleanSpark this week about their growing their facilities, but it was like 5 small facilities, and we've talked extensively about these mining companies maybe not having access to them significant sites like we've seen at Corsicana, like the Denton facility, these big flagship sites. Are they a thing of the past? We know that IREN have got a piece of land. They've got an option to build on that, but that's you're talking a couple of years time, and actually, we say a couple of years time. I would imagine they're having to plan now for the parts of that land, because Corsicana is more than 2 years since they purchased the site, and October 2022 is when they broke ground for the first time. So, and it still looks like, effectively still looks like a big building site, although there are 3 100 megawatt buildings already up, and they've got a fourth one to get up before the end of the year. So, but this HPC, we talk about adoption of Bitcoin. The adoption of AI blew everything out the window. I mean, AI did in sort of like a number of weeks what it took Facebook and some of these other big social media things years to achieve. And so, if you think there's a bubble, and it's like saying the internet will never last. People are using AI on a more than a daily basis now. It's part and parcel of a lot of people's lives. A lot of businesses will be using it.
A lot of
you know,
businesses are built on it now, right? And
built on it. Absolutely.
look at the
Especially
share price of Nvidia.
is
Yeah.
ours built on it, Bryce? I don't know.
I don't know. Are you real there, Anthony? But yeah, I definitely agree. There's
Signing
no
off.
way in my mind this is a trend, and I think whether you call it luck or good timing or great positioning, these Bitcoin miners are in the limelight right now. They are in the perfect spot at the perfect time with the perfect access to this infrastructure, and boy, is it nice from an investment
and
standpoint.
the HPC doesn't seem to get the bad press that the Bitcoin mining does in terms of like power usage and things like that. I guess like for like, it doesn't use much power, but it uses a lot. These data center sites that are geared up for the big players like AWS and Microsoft, and the likes of CoreWeave and a number of other ones out there. They need massive amounts of facilities. Even this 200 megawatts that Core Scientific provided is a drop in the ocean. It's the tip of the iceberg. They'll be looking for trying to source sites quicker than the Bitcoin miners will, because that they're trying to get this. They can see the future, and at the moment, as I say, I've used AI for over a year, and I can see the benefits of it. It's not perfect, but at the end of the day, I think if you pay more, you can get it to where you need to be. It's going to be one of those different levels of service, and there'll be a sort of like a premium pay for that. So the revenues will start coming back to these companies. A lot of it's free at the moment, but believe you me, they'll have a model in place where people have started paying for it and using it. But it's an interesting time, and 2 or 3 months ago, people were unsure about should the miners be doing HPC, and I think that shift has changed now. I think we're seeing, it was just sort of like, I get Jason's stance. He's categorically said, and I believe, the likes of CleanSpark, Marathon, Bitfarms, not interested. So they're not the only ones. There's 4, and they're all big players. But then you look at the rest of them; they're all sort of at it. They're all looking to do it, and that model from Core Scientific is totally different from all the other models. It really is, because they're not having the risk has gone away. The risk has gone away from them because they don't have risk of power. Risk of power sits with CoreWeave. They negotiate the power cost with the power company, and they will also discuss the utilization of that power as well. So in Texas, you're not going to have 100% of power all the time because of the demand there, and they have certain schemes. It's not massive. It's not going to be game changing, but it won't be 5 nines.
No. And that was really nice actually in the presentation from Riot. They actually gave a percentage of time that they curtail. and it was sub 5%, you guys. So we talk about curtailment a lot on the channel. This is really just at the very outermost extremes of the regular operating cycle. So not a huge impact time-wise, but definitely a huge impact financial-wise, as we've seen with those credits. So Anthony, great to be back here on the podcast today. Great to see some of the smaller companies we cover getting the recognition, really following suit with some of the bigger players. It's a great time to be in the Bitcoin mining / HPC sector. And we've actually added a number of features on the website to better represent the HPC power purchase agreements and megawatts under management. So I encourage you guys to go take a look at that. We're currently working on an interactive map as well that'll allow you to identify the different sites each company has, what they're used for, and the size of those sites in terms of power usage. So Anthony, great to be back with you. We have another podcast scheduled tomorrow. We'll keep a close eye on the markets today. They've already been throwing us a couple curveballs. I'll give it back to you for any closing thoughts, and thanks for your time.
Yeah, no, good to be back in our normal role. I assume that there'll be some news items coming out next few days. There's a number of like rumored stories there, and we won't discuss the rumors, but we'll wait for them to come out and materialize. Yeah, it's all good at the moment. I mean, the Bitcoin price I think reached its peak around about March the 13th or 14th. That's pulled back a little bit, probably like say 10 or 12%. And yet the miners have actually managed to sort of like recover a little bit in that period. So it's like a reverse uncoupling. We saw them decouple at the start of the year, and the Bitcoin price rallied, and most of the mining stocks, apart from CleanSpark, who added like 6 exahash, you're going to get some credibility for 6 exahash. It's like adding a whole new miner to your stable. So but now we're seeing that sort of like people pivoting back into their miners. Maybe pivoting out of the ETFs, who knows, but there seems to be a little bit more coming into the miners. Think about the volumes on some of these mining companies. It's been absolutely immense. We were talking last week in Texas, over the last 3 years, Marathon has dominated the volumes on a daily basis. Well, last week they were 6th in terms of the volumes on some of those days. Bitfarms and TeraWulf and 4 of the companies we're already, in terms of volume, we're talking $60-70 million worth of shares a day. Absolutely game-changing numbers there. So there seems to be a lot more interest in the mining stocks, and that's what we hope for, because it makes it all interesting. But yeah, look forward to our next podcast.
And what I'm personally loving down deep, Anthony, we took a lot of flack saying, oh, there's no halving in the ETFs. MicroStrategy doesn't have any halving. Well, you know what, you guys, they also don't have any HPC. So now we're getting the benefit of that. So we'll see it tomorrow. Hopefully you guys are making some money. We're not going to discuss the rumors, but you can. Feel free to leave them in the comment section below. What's your prediction here? It's been eerily quiet in the Bitcoin mining community this week. So we want to hear your thoughts. If you're still watching, you know the deal. Smash the like button, subscribe to the channel. We'll see you tomorrow.